Good morning, everybody, and welcome to Full Transparency Trading, where I am your host, Sebastian. Today, we are entering FTT Teachings, that is Full Transparency Trading Teaching. In this series, I'm going to take you from the very beginning of what it's like to be a day trader until the point that I'm at now, which is definitely not the end, but I'm going to take you as far as I personally know through all of the knowledge that I've acquired over the last 4 years. I'm not going to shortchange you at all. But today, this is for the brand new trader. This is for the trader who's up and coming. And later on, you'll see that we'll get into lessons for more advanced trading. But let's say it's July 4th. And July 4th weekend, you were talking to a guy at a barbecue. And you're like, hey, man, what do you do? He's like, oh, I am a professional investor or day trader. And you're like, huh, well, that sounds what's that? And he goes into a spiel about what day trading is and how it can be lucrative but dangerous, but it gets you curious. And you start asking yourself, I wonder if I could be a day trader. So you log in on Monday to your Robinhood account that you just put $100 in, or your Thinkorswim account that you just put $100 in. You're like, all right, I'm going to start day trading. Open up a chart and you see this. And you're like, what the hell is this? What is this? You see red and blue, or in most people's cases, red and green. And all you see is this vertical rectangle, little lines on top or big lines on top. You have vertical rectangle that's red with a little line on top or a big line on top, or a little line on bottom or a big line on bottom. And you're just like, what? What am I even looking at? That's where I'm taking you guys right now. In this first video, I'm going to take you to the very basics, because I believe that with day trading, you need to start from the very beginning in order to get a full understanding of how to read the market and how to make money. Now, the technical side of things is a very small portion of how the actual art of making money in the stock market works, but we'll focus on the technical aspect for now, because it's what you need at your core to be a good day trader. This is a bullish candle. What does bullish mean? Bullish means that buyers are in control. Bullish means that these candles start from the bottom and work their way up. Bulls. This is a bearish candle, or a bear candle. Rawr, bears. Most people think that bears are scary and bad, but I find that bearish candles are some of the most fantastic candles you can ever trade. Get to that in another time. A bullish candle opens right here. So we're going to click on edit. We're going to talk about position 1. So position 1 is right here. This is where the candle opens. That's the start of the day. Let's say you're in a coffee shop, and in this particular coffee shop, they buy fresh beans, and the price of the coffee is based on how much the beans are. So at the start of the day, when their order came in for the beans were $1. So your coffee was like $1.50. Okay, boom. Market shoots up. They come in. They're like, yo, we got the new Colombian beans. The Colombian beans are coming in at $4. So the market shoots all the way up to $4. Right? Position number 2. All right, let's say a little bit towards the middle part of the day, the market comes all the way back down through this candle. Position 3, and this is the lowest point of the candle. Bottom candle wick, that's the lowest point of the price of the day. The market opens here, shoots all the way up to position 4, where the beans are like 50, comes all the way down where the beans are $1, goes back up through that $1.50 where you started the day, and then keeps going up and up and up, and then finally they settle on $3 right here. 1, start of the candle. Position 2, end of the candle. Position 3, lowest point of the candle. Position 4, highest point of the candle. But position 2 right here is where the market closes. Same thing starts with a bearish candle. The bearish candle, let's say this is the previous candle. The candle closed at $2. All right, bearish candle is going to start right here. Number 1, it's going to continue the trend here, pause, and start dropping. Position number 2 is right here. Bearish candle is going down. Previous candle was right here. Bearish candle starts right there. That's the open, and it starts pushing down towards that initial $1. Goes down to $1, stops right there. All right, then pulls all the way back up to the $4 point, position 3, and they go, nah, we start selling off again. So then you go all the way back down, settle at the bottom of the candle there, number 4, and the 150. You had gone all the way up to $4, settled on $3.50. You went all the way down to $1 and you settled on the $1.50, and that's a bearish candle. Up and 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 up. It goes down, up, down some more, up again, down more, and then falls off the face of the planet. So this is the chart that goes up. This is why I don't read the squiggly lines. This is why I prefer the candles, because this is a lot harder to read than this. Let's go on to the next slide. Let's cancel this out. Boop, boop. And this is going to be the full explanation. Just as I was giving you the example of there, this is a better full explanation of the candle. Have the open, the price at the beginning of the 5-minute period, because we're going to use 5-minute candles for most of our examples. Have the low, the lowest price that the actual commodity was traded. So in this particular time, we're talking about coffee beans. Now, what I trade is NQ. We'll get into what I trade on another date. You have the highest price that the coffee beans traded for, and then you have a close, the price at the end of the 5-minute period of the coffee bean trading. Okay, move over to the bearish side. You have the open, the price at the beginning of the 5-minute period. Again, to the downside, you have the lowest price that the coffee was traded down here on the bottom candle wick. Have the highest price that the coffee was traded on the top of the candle wick, and then you have the price of where it ended at the end of that 5-minute period. Okay, so this is a basic 5-minute chart. This is a bullish price action, meaning that the market is trending up, and this is bearish price action, meaning that the market is trending down. And when I say price action, these are the prices of for here, and the action is what's happening up, or is it moving down? So again, summarize. Green, the close is higher than the open. That means that it is bullish. The buyers are in control. That's why it's bullish. And there's potential for upwards that it stopped over there. And then you have bearish. Bearish is the close is lower than the open. Sellers are in control, and there's potential for further downwards move. And that is going to end today's lesson chart. So the very first chart that we saw was bullish price action. This chart starts here and starts bearish price action. Bearish, it starts at the top, working its way downwards with the ability to go lower. Very first candle over here on the left was a blue candle, or a green candle in your case. Like this level right here, bunch of sellers pushing the orders down, causing it to have resistance. First pushing from right here, goes off. Next candle, push from right there, sells off. The next candle is a positive candle, just by like a micro smidge, but it's still a positive candle. Next candle is a negative candle, starting from right here, down, down, the next down, start rebounding, and then we start validating the term for another day. That is how you read the price action of the chart in order to take trades. This is a bullish candle, meaning that the price action started down here at the bottom. It went up with the ability to go up, meaning that the buyers are in control. This is the lowest selling point of the candle, the highest selling point of the candle. This is where the candle closed. On a bearish candle, downside, where the sellers being, this is the opening of the candle. This is the highest point that the candle sold. This is the lowest point that the candle sold. And this is the close of the candle. That is your lesson, your FTT teaching for today, guys. I will see you in the next video. So feel free to play this video as many times as you need to understand. If there's anything that I'm going over a little bit too fast or you need me to slow down, let me know in the comments section. But this has been another Full Transparency Trading session where I'm your host, Sebastian. I'm out.